Good evening and a very warm welcome to all our viewers to the Diwali edition of Cedrus Knowledge Series. Today we complete 3 years to the Knowledge Series, and this is the third anniversary of the Knowledge Series, wherein we call upon a variety of speakers, where we get a chance to interact with them on topics related to not just investments and finance, but also health and overall well-being. We'll now play a short video of Cedrus Wealth Partners. For the Diwali edition in this Samvat, we are extremely pleased to have with us Mr. Pankaj Tibrewal. Uh, he's the fund manager and executive vice president of Kotak Mahindra AMC. He has been associated with the mutual fund industry since 2003, wherein he has managed several debt and equity schemes. He has a rich experience of 20 years and is also known as one of the most successful mid-cap managers. A very warm welcome, sir. It's an absolute honor to interact with you and have your views on the strategy that one must observe while investing, particularly in the mid-caps during these times. We'll now play a short video to further introduce Mr. Tibrewal. Once again, a very warm welcome to all our viewers and to you, sir. Without further ado, I would like to hand it over to Mr. Nilesh Bajaj for taking the discussion forward.
Thank you, Unnati, for the wonderful introduction. Wish everyone a very happy Diwali and a prosperous and healthy New Year. Uh, this Diwali is very different from the Diwali which we saw in 2020, when the expectations were very low from investors. COVID was everywhere, and we were locked down in our houses. In 2023, we are seeing a lot of excitement, especially in the mid-cap space. And Pankaj, I remember, in 2020, the typical rear view mirror approach, where, you were seeing that most of the mid-cap and small caps were giving very low returns or negative returns in that period. And I remember those were the best times to actually invest. And today, 3 years forward, we are seeing this space where the returns have been it's been one of the best categories in the mutual funds, as well as there is a lot of excitement, and that is the reason why I thought that this Diwali we should have something which is around mid caps and small caps, because there is where we see a lot of excitement, which is a little bit dangerous in some cases sometimes. And that's the reason we thought that who better person to invite than you. We have been recommending your Kotak emerging equity since a very long time. It's helped our investors create wealth, and thank you very much for that. Uh, and I thought that because it's a largest fund now, you have seen a lot of inflows coming in that fund. Uh, Let us begin with a discussion where the first question is actually around this excitement which we are seeing, Pankaj, around equities. And you're seeing a lot of investors coming and investing in this space. Do you feel it's the right time, or do you feel that investors should be a little cautious, citing the valuations, heightened valuations of specifically mid caps and small caps?
Thank you, Nilesh, for the kind introduction, and wish you and all your investors and viewers a very, very happy Diwali. Uh, you are exactly right. If you go and rewind ourselves and reflect back in 2020, I still remember, the 3 year returns of the category was negative, the mid and small cap, because you were coming off a high of 2017, which was the peak, and 18 and 19 was the bear market of mid and small cap, if you remember. And after that, we saw last 3 years a very sharp run up in this category, and all the 3, 5, 10 year returns are looking so different than what it was in March 20. I've been managing this category for almost 15 years now. And just to put things in perspective, over the longer term, this category tends to be very rewarding. Because if your view is that economy, which has moved from 1 to 3.5 trillion, and from 3.5, it will over a period of time move to 8, 10 trillion dollars. A lot of those businesses which will grow disproportionate in size are part of this mid and small cap. So from a medium to long term, one needs to have exposure to this category. But what is happening in the short term is concerning. And I think one needs to take a cautious view on that. We have seen in the previous cycles also, 2007, 8, if you remember, then 2010 to 2013, then you remember 2018, 19, and then 2020, the COVID pariksha. In between, there have been periods of extreme volatility and drawdowns. And people who have made returns are the people who have been consistent in their approach and patient with this category over medium to long term. If you want to make a quick buck, probably there is a very high probability you will pay a tuition fee and go. Probably you may not kind of make that wealth which kind of you see in the papers. So our recommendation today is that in the near term, we are seeing risk which are there in this category. And let me point out what are the 3, 4 data points which we are seeing, which is making me nervous. And all these data points we have seen over cycles where we have turned bearish, where we have turned bullish. And in COVID, we were super bullish on this category, saying that there's a huge margin of safety. But for the data points, I think it's very necessary to understand which are the data points which are making me a little cautious on this space from a near term perspective. The first one, if you look at from a market cap distribution, the large cap contribution to overall market cap has come down to 65%. And by large cap means with the top 100 companies of India. And the rest, mid and small cap, today constitutes about 35% of the overall market cap. On an average, this number has been about 25 to 28%. Today, it's 35%. But on the profit side, because finally stocks are slave of earnings from medium to long term perspective, the top 100 companies contribute 75% of the profits of corporate India, and the mid and small cap contribute 25% only. So against 25, the market cap distribution is 35. Against 75 of large cap, the market cap distribution is 65. So there is a disconnect between profitability and market cap distribution. So keep that in mind. The second point is that if you look at the earnings yield, And just to make it simplified, earnings yield is nothing but 1 by P. आप P को inverse कर दो, वो earnings yield हो जाती है. And today, if you look at the earnings yield of mid, large, small, of all the profitable companies for a like-to-like comparison, there's no difference between mid, small, micro, and large. So, for that same amount of earnings yield on a trailing basis, why should you take extra risk in small, micro when the large caps are available at the same earnings yield today? So, that's the second point. And the third point, if you look at from a overall sentiment perspective, we track something called Nifty 100 value participation. What does that do? Out of 100 rupees traded on exchange, during the times of greed like this, everybody wants to invest in mid, small, micro. Nobody wants large cap. So out of this 100 rupees traded on exchange, large caps get traded by only 40 to 45 rupees. The rest 55 rupees in mid and small cap. And during times of fear, everybody wants to hide themselves in large caps. And that number moves to 70 to 75, 80 rupees. Today, when we look at, there's clear indication that greed is prevalent on the street. That number of Nifty value 100 value participation has come down to 40 in the month of September. And that gives us some kind of a understanding that probably this may not be the right time to just from a near term perspective to invest in mid and small cap. If anybody is investing, one should clearly have a 3 5 year view, not less than that, because a lot of returns in our view has been front loaded over the last 3 years, and there could be a probability that next 6 to 12 months could be a lull or a drawdown phase in this category, and you need to be really patient with that. So when I look at the data points, it's all suggesting that in the near term, the margin of safety is quite low right now from a short term perspective in mid and small cap, though that's the flavor of the season. Everybody is a fund manager, सबको mid, small, micro चाहिए. किसी को आज के दिन 10-15% का large cap का annualized return नहीं चाहिए. So I think that's something we need to be a little worried about. And last but not the least, a lot of money looking at the past returns has flown in the last 1 year in the mid and small cap category. In the last 6 months, 30,000 crore has inflows have happened in the small cap, another 18 to 20,000 crores in the mid cap. Add over that the alternate platforms like PMS, AIFs, and others. So there's a huge rush of money, but the free float of the so-called underlying has not increased that dramatically. So large pool of money chasing little stocks has led to the rating of this entire category, and we need to be a little careful on that side. And that's the reason I say that the mortality rate in this category is quite high. So if you look at over the last 20 years, only 13% of mid small caps have transformed themselves either to mid caps or to large caps. So बाहर से देखने से बहुत अच्छा लगता है, मिड स्मॉल मल्टी बैगर, बट अगर आप 20 साल में देखो तो ये एक कैटेगरी है जहाँ डेथ भी बहुत जल्दी होती है, मोर्टेलिटी रेट बहुत ज़्यादा है, लैंड माइन्स हैं, शार्क्स हैं. You have to navigate yourself over a period of time in this, and then it will be really wealth creating category. So near term, just to put things in perspective, we are a little cautious on this category. Lower quality companies, low free float companies are moving up. We need to be careful that we are not trapped in that and make less and less mistakes. And if we do that over a medium to long term, we will be on the pitch and we can score runs, and that's very very important.
No, wonderful. Actually, so very well said that definitely, it is an overvalued space. There is a lot of froth, uh, and investors need to be cautious. One more thing which you very clearly told is that 13% navigate to mid and large caps from small and mid caps. So the mortality rate is also very high, which means that investors can lose money before they earn money. In fact,
Absolutely, absolutely.
what one more thing what we have seen is, like we saw even between 17 and 20, is that this space when it goes into a bear phase tends to be there for a longer period than the large caps. In fact, like we have seen historically also. So, coming to my, next question, and this is more to do with the earnings. We've seen phenomenal earnings come in this space, this category specifically. Most of them are manufacturers. You can throw some light on, what kind of companies are there, but typically they are manufacturers. We've seen a huge rally in this category, the manufacturing category, and especially because of the earning yields. But I think prices have also run up, faster than earnings, in fact. So, the margin of safety has come down. What do you feel actually?
Absolutely, Nilesh. If you look at, and the way I look at it is that uh, last year mostly, a large part of the earnings was contributed by banking and financials. And if you look at from an overall perspective, banking and financials was the key. Uh, are we hand? Hello.
No,
Yes.
we can hear you.
I,
We can hear you.
Okay, we can. Okay, okay.
Yeah, yeah,
So if you look at NSE 500 companies today, there are 77 companies which are BFSI companies and 423 companies which are non-banking and financial companies. And in that 77 companies, you have private sector bank, PSU banks, wealth management, asset management, life insurance, everything combined in that. So if you look at last year, the Nifty overall earnings growth was about 6-7%, but the
Mhm,
banking and financial contributed 50% earnings growth, and the rest 423 companies was negative earnings growth because of margin pressure. Now look at the
mhm,
first quarter, and second quarter is underway because results are started to come out. Non-banking started to perform because margin pressures were behind us. Margins started to improve, but the only thing one needs to keep in mind that top line is not growing because WPI has collapsed on the inflation side. So top line नहीं grow हो रहा है, margin improvement हो रहा है, and probably
mhm,
this second quarter will be the last quarter of major margin improvement. Third quarter will also see, but very minimal. So in our view, that a lot of the earnings growth path in the near term has been priced into the non-BFSI space as we speak. And look at the
mhm,
BFSI space in the first quarter. Again,
mhm,
40% earnings growth. Non-BFSI contributed 35% earnings growth. And on an
mhm,
average, you had about 15-20% earnings growth for the whole universe of NSE 500. I think
mhm,
in the non-BFSI, one needs to take a slightly longer term view now because valuations have got re-rated massively, and
mhm,
the earnings growth, probably the ones which we are seeing, is already priced in. Also, don't forget that the global environment is not so conducive. There is a Israel war. The cost of capital, which is led by Fed, interest rates have moved up to 5%. Oil
mhm,
is at $90 again. So that will put pressure on a lot of companies, which also depends on export. And we have started to see in this quarter itself that many
mhm,
companies on the industrial cap goods manufacturing are coming on the calls and saying that the export demand has been subdued. It's only the
mhm,
domestic piece which are still doing okay, whether it be autos or capex led investment cycle demand. So we need to be a little careful. And my sense is from second quarter onwards, the earnings trajectory will start looking to be a little lower on the downside. So my sense is that one needs to be careful about. My Our view has been that GARP is the wedge strategy, which is growth at reasonable price. Look out for companies which are strong franchise, strong overall thought process, management teams, and where the valuation comfort is also there. In many of the businesses, we are seeing that valuation comfort is very limited. And one
mhm.
disappointment, the stocks correct by 25-30% very fast also.
True.
So keep that valuation framework also in mind before looking at the space from a earnings only perspective.
Absolutely. One more thing which has happened in the Indian equity markets, especially the equity mutual funds, is that we are seeing close to about, I assume it's about 15,000 crores of SIP inflows
Absolutely.
every month. A lot of it goes into mid and small caps.
Yes.
And we have seen this in 2021 October when the market started correcting from there onwards. and when there was a Ukraine war and the interest rate started moving up in US, you saw that it worked like a counterbalance. The domestic investors investing when the FIs were selling. Uh, do you feel that this is one of the best strategies to actually accumulate the mid and small cap, investing in mid and small caps?
I think absolutely, Nilesh. If you look at this category, has to be looked in from a slightly longer term perspective. And as I say, SIP or STP will be the best route. And if market provides you correction, then invest a bit of lump sum like March, April of 2020. Some outlier event happens, and this category tends to be illiquid. Don't forget that. ये अभिमन्यु है. यहाँ
Hmm,
अंदर आ सकते हो आप, लेकिन आप
hmm,
अपने मर्जी से बाहर नहीं जा सकते हो because the
hmm.
liquidity is just dries up during the
True.
crisis time. You know,
Hmm.
so one needs to be a little careful when one is allocating capital to this space and make sure that you do a regular systematic SIP and STP. And I think that obviously works wonders in this category over longer periods of time.
Wonderful. You asked, you told about STPs, in fact. Now, take a scenario where someone wants to invest a crore and he's got money right now and he has a horizon of 10 years. And we give him an allocation of 25% in the mid and small cap space. Uh, this STP, which we are very regularly doing in Cedrus, but what should be the period? What do you feel that, should it be for a shorter period of time, or you feel that it should be a longer period of time, or it should be tactical? What do you feel?
Nilesh, I think STP has to be tactical.
Hmm.
STP can't be for a longer period of time, otherwise it will lose its essence. For
Hmm.
example, times like today, when
Hmm.
there are worries in the near term, and there
Hmm.
are events also domestically, 5 state elections, then the general elections.
Hmm.
Our sense is that STP should be a better route because to take this exposure to this category. So maybe 6 to 12 months STP from here on will make a
Hmm.
lot of sense. But if
Hmm.
you are looking from a longer term perspective, I think SIPs and mostly the top up SIPs also do wonders from this category perspective.
Hmm. Yeah, so 6 to 12 months STP, and in case if there is a big correction, we can actually switch.
Absolute lump sum,
Yeah,
absolutely, and
you
or
know,
do a
you
lump
run
sum.
absolutely. You run a very successful fund, the Kotak Emerging Equities Fund, and we have seen ups and downs in that fund also. But it's been one of the leaders in the mid cap category space. You've seen huge inflows which have come in this space. So my first question to you is that how are you managing these inflows? Because the amount of inflows which is coming, I'm sure you want that inflow to come during bad times. When and it's every fund manager's dream that they get money when the markets are cheap, but unfortunately the money comes when the markets are expensive. So so how are you actually what is your current strategy in the Kotak emerging equities?
So, Nilesh, if you look at when I took this fund, it was a 50 crore fund, 50 or 60 crore fund, right?
Hmm.
From there, from 50, 60 crore, we have, with the help of investors, trust, process, and partners like you, we are now at 34, 35,000 crores. So the journey has been remarkable. It has not been a linear journey from 50, 60 crores to 34, 35,000 crores. There's been lots of ups and downs, but our sense is that there are few things which has worked for the fund, and money has always come in at the top, at the bottom, but few things which are core to us, I think, has worked for the fund. One,
Hmm.
we have never deviated from our philosophy of
Hmm.
buying quality companies. And I think that only happens if you know what not to do. And we have a whole list of things where we will not do. And when you know what not to do in life, then the list of what to do becomes very small and you can focus your energies towards that. So that's been very clear that what we will not do in the fund. what are the companies we will not invest in, what are the things we will not touch. And
mm,
those things at times have tested our patience. In 2017, for example, when junk was flying, it was making us no sense. We underperformed for 6 months. Last 4 5 months, when low quality is not done extremely well, we have underperformed. But our
mm,
communication to investors have been that we will not be yearly champions. If you are
mm,
looking for a yearly topper, maybe we are not the guys to manage your money. But if you are
mm,
looking at consistency and predictability over medium to long term, probably will do justice to your money. And that's something which is core to our philosophy. And
mm,
that's why we don't take excessive risk in the fund. The second
mm,
is, rather than worrying about upside, think about downside. I think if you can protect the downside in this category from a medium to long term, trust me, your fund over a period of time will be there across charts, across time period. Because
mm.
ड्रॉडाउन्स में अगर आप कमाई आप ज़्यादा ना गिरो ना, वो भी एक कमाई है, and वो
True.
सबसे बड़ी कमाई है. So
Mm,
that if you go back into the history of the fund, in every drawdown, we have made
mm,
sure that we have created alpha versus the
mm,
benchmark. So that's been core to us, and
mm,
that strategy actually is very important right now because
mm,
markets are at elevated valuation. So the only thing
mm,
we ask our analysts, don't tell me upside. Upside तो आ जाएगा. Tell me
mm,
where you can lose minimum amount of money, and
mm,
before the upside, tell me how much is the downside. And that's
mm,
why we are selecting the sectors right now where we think pharma is reasonably good. IT, probably the downgrade cycle is behind us. Financials, large cap banks are looking much okay on the valuation side.
mm,
Engineering cap goods on certain pockets are looking quite good from a 3 5 year perspective. Chemical, the
mm,
correction has gone through last 2 years. Probably
mm,
now from here on, over the next 6 to 12 months, this sector probably can give you opportunities as well. So we have been, across diversified way, we are looking for pockets where the probability of losing money is less at this point of time, rather than looking at for upside perspective.
mm,
So, and this been a core to our thought process that during
mm.
drawdowns, protect the capital of the investors. Upside will automatically come if you are there on the pitch for a longer period of time.
Absolutely. So I think this very well cites the GARP philosophy, which you
Yes.
mentioned, that you will not overpay for any growth-oriented company. In fact.
Don't overpay. Look at PEG, that for per unit of growth, how much is the price you are paying. Uh,
Mm,
that's I think classic. And I think over a period of time, one thing which I believe in India works beautifully is identifying the right set of promoters and entrepreneurs. See,
mm,
whatever everybody say, reform, ye, wo, but if you
mm,
ask me, the biggest blessing of India today is the
mm,
entrepreneurship. We are blessed that we have entrepreneurs all over the country. We
mm,
have at the tier 2, tier 3 cities. And recently I wrote a tweet. I don't know whether you got a chance to look at it, that how
mm,
things have changed over the last decade. The next generation is taking over reins. They don't want jugaad. They don't want the regulatory hassles. They
mm,
want to do the things the right way. Tier 2,
mm,
tier 3, we are sitting a sharp surge of billionaires. If you look at the recent top 1,000 billionaires, you see from
mm,
Coimbatore, Surat, Pune,
mm,
Udaipur. You talk about smaller cities, right? Tier 2, tier 3
mm,
cities. And that's
mm,
the India which we are positive. And if you want to ride that India, you have to
mm,
go at the ground level, choose the right entrepreneur, right management teams, and trust me, wealth creation will automatically happen. So do certain things the basic way, right way. कोई रॉकेट साइंस नहीं है, और गलतियां कम से कम करो, कंपाउंडिंग अपने आप हो जाएगा. And last
yeah,
but not the least, I think portfolio construction plays a very important role. And there we believe that gorilla to king kong strategy, कि
mhm,
50 60 गोरिल्लाज आप अपने प्रोसेसर सिलेक्ट कर लो, उसमें से कोई
mm,
ना कोई किंग कॉन्ग बन जाएगा और आपके
mm.
पोर्टफोलियो को वो रिटर्न दे जाएगा.
Okay. So how many stocks do you have in the portfolio right now?
About 70 stocks.
70 stocks. That's quite low compared to the size of the size which you're managing. In fact, my
Yes.
next question to you is size a constraint? Are you facing difficulties in deploying funds? With 34,000 crores of assets. which is fairly large, for a mid cap fund. And are you seeing opportunities and to deploy this amount? And with 70 companies, I'm sure you have constrained yourself with the number of companies also. So one is size, getting a constraint. Do you feel that you will be outperforming without the constraint of size? uh, uh, and second thing is actually more to do with uh, the overall money which is coming. So more money is chasing the same stocks.
Yeah.
So the valuations are becoming expensive. So is size getting a constraint over there?
So, Nilesh, so obviously size has its own advantages and disadvantages. But I
Hmm.
think in India, size has been spoken a lot. So let
Hmm.
me, give you some data points for you and your investors. So
Hmm.
when size, I think we should think in terms of risk, the risk
Hmm.
of execution, the risk of redemption, and making sure that we have enough liquidity to meet the redemptions, right? Now,
Hmm.
when I look at the portfolio from a free float market cap, I'll come to the total market cap, but what
Hmm.
is relevant for the investors is the free float market cap. कि
True.
कितना माल आप ले सकते हो, कितना माल आप बेच सकते हो, X of promoter and maybe strategic investors, right? So when I
Hmm.
look at this analysis I did a month and a half back, that in my emerging equity, the mid cap holdings which are there
Hmm.
today is 1% of the listed mid cap universe out of the 150 stock universe. And
Hmm.
similarly, the small cap part of the fund in that
Hmm.
emerging equity commands
Hmm.
about 1.3% of the free float market cap of the entire universe which we have. So I
Hmm.
think 1% and 1.3% is quite low. And if you look put that into total market cap perspective, is just 0.5% of entire mid cap universe, and the small cap is about again 0.5, 0.6% of the entire small cap universe. So I think
Hmm.
one has to think about liquidity from this aspect, that how much am I of the free float market cap of the entire mid cap and small cap universe, which is not a very alarming number as we speak today. However, the only challenge which we face is that every 6 months, many of the companies graduate themselves to either from mid to large, or
True.
mid to small. They also get downgraded as well because of the last six
Hmm.
months average market cap, and we have to rebalance that portfolio very fast. And at that time, and it could be a little challenging in the
Hmm.
sense that you have to sell and you also have to buy to rebalance the portfolio. So we keep
Hmm.
enough buffer in terms of mid cap allocation, in terms of large cap, in terms of small cap, so that we don't have that much of a problem. But I think size has been a concern when it was a 5,000 crore. Then we moved to 10,000, then we moved to 15, 20, 25, 30, and 35. So at every
Hmm.
level, I have got
Hmm.
this question, that is
Hmm.
size a constraint for you? I
True.
still say that the day we feel that, we will come to you and say that thank you so much, we don't want you.
No, wonderful. So well said, actually. And as we speak, we are not seeing size being a constraint. Yeah, and we very strongly believe at Cedrus that consistency is more important than sheer big returns in a short period of time. If you have a consistent fund which has been consistently performing over a longer period of time, that is what will actually lead to wealth creation. uh, something now, when Naren was there on a show last time, and he in fact gave a very outlandish answer to one of my questions, and he said that now you should enjoy what you have earned. Okay, so okay, you've earned a lot, paisa bahut kama liya hai. Okay, and but you should spend. The economy also has to grow. so and it's just a kind of a coincidence that you are there, who's actually created a lot of wealth for our investors in the last 3 years, and before that also. uh, do you feel that the investors should enjoy that money which they have earned,
Yes,
go for
absolutely.
a
I mean,
holiday?
absolutely. I mean, everything should be,
Uh,
within limits and within your own means. You should not borrow to consume, is my belief. You should
hmm,
save to consume. over a period of time. And
Right.
Nilesh, I think sometimes I feel that strategic, from a overall financial upliftment, we
Hmm.
us all are doing our job, right? And it's in a way
Hmm.
giving back to society again.
Hmm.
And when I go to seminars, when I go to road shows, people who have invested 500,000 rupees come to me and say, "Beta, mera paisa safe hai na." So
Hmm.
that's the blessing which we are getting every day, and that's a huge fiduciary responsibility, which I
Hmm.
sleep every night with.
Hmm.
Almost across my four funds, we have 2.4 million investors whose
Hmm.
financial dreams are linked to what we do, right, every day. So I think we have to keep working hard, making sure that we don't disappoint them. We will make mistakes, but mistakes should not be large enough that it
Hmm.
derails the fund return from a longer term perspective. And that's something which is core to our heart at Kotak also. And that's something which I completely kind of passionately believe in. And over a period of time, making sure that everybody becomes wealthy who is there in the fund, and
Hmm.
fulfill their dreams is something which is core to my heart.
Yeah. The wonderful. In fact, there were three very important learnings, Pankaj, which we also adhere to. One, the GAR philosophy of your philosophy of constructing the portfolio. Two is that see that you have a clear do's and don'ts, and when you have that, you have a lot of clarity as what to do, what not to do. If you know what you need to do, that's so important in investments, that stay away from the don'ts. And the third thing which you just mentioned, okay, that make less mistakes. Mistakes will happen, but if the mistakes are something which are within control, definitely wealth will get created, in fact. uh,
Absolutely.
what is your what is your strategy or for this Samawat, actually, for our investors? Anything which you would like to tell all our investors and audience, that they should invest between now and the next Diwali.
I think in the near term, all the data points are suggesting that large caps are much more safer right now in today's environment compared to mid and small caps, basically on valuation side. In the next 12 months, I'm talking about. And if you decode the large cap Nifty index, you will see that about 50% of the index has been in a bear market. They have
Hmm.
not participated from the move which has happened from 15, 16,000 to 19,000. And I think when, and these companies have seen their earnings grow as well. To just give you one data point, since 2021 till now, large cap market cap universe have moved by about 11, 12%. But
Hmm.
the absolute profit growth has been 40%. That means
Hmm.
there has been a derating in the multiples of large cap, and opposite has happened to mid and small caps. From a
Hmm.
tactical perspective, we believe that there is decent margin of safety today as we speak on the large cap side. But मेरे बोलने से क्या होता है? Everybody wants mid, small, micro. हमारा काम है हम आपको सतर्क करें. But kahin na kahin large caps are looking to be a little lucrative, and
Hmm.
my sense is valuation there are not much of a concern, and one should have some allocation to large cap, stroke multi cap, stroke flexi cap funds, and I think
Hmm.
that should be a strategy which should be rewarded over the next 6 12 months.
No, and what you clearly told, that हम बोलने से क्या होने वाला है, in the end it's the investor who's going to decide.
Yes,
But yeah, definitely there's a very key important role of an advisor also to be played,
yes,
and we need to see that we handled investors during bad times, and we see that we keep them under control during good times. And I
absolutely,
think this is the time where we have to see as advisors, where we keep them in control. They don't go overboard. And like what you mentioned, that, invest in a staggered manner, because there is a froth which is created. And definitely, we never know when this froth will vanish, but
absolutely,
we need to see that we don't take that undue risk, in fact.
absolutely, absolutely,
Uh,
Nilesh.
your final closing remarks for everyone at for all the audience and for everyone watching you.
See, we are seeing significant changes at the ground level in the country, which at least I have not seen for more than 2 decades. Whether it be the belief in oneself as an Indian, whether belief in the country at the political dispensation, at the opportunities in manufacturing, the IT stack, I think just remarkable. And maybe 25, 40, 50 years back, later, when we reflect back, you will think 2020 COVID was a inflection point in India's economic cycle. Like the way we look at 91 and say that
Mm,
that was the time ki liberalization hua and we saw that growth starting to happen. Similarly, in 2022, 20 post COVID, you will reflect that. So I think
mm,
we are going through a very interesting times over the next decade or so. What will as investors need is their own temperament, their own process.
mm,
During this journey, you will see drawdowns happening. You will
mm,
see a lot of noise around you, worrying you. But if you are a focused person, or a focused investor, please don't get swayed by that. There, your own temperament, your own discipline will come very handy. And I think this opportunity should not be missed. Uh,
mm,
this is a decadal opportunity. आई थिंक ऐसा नहीं हो कि बच्चे बाद में कंप्लेन करें कि आपने किया क्या. You saw the biggest golden era of the country and you didn't create wealth. So I think it's
mm,
a huge wealth creating opportunity. Don't get
mm,
swayed by drawdowns which will happen during this journey. The journey
mm.
will be very beautiful. Just enjoy your journey over a longer period of time.
Thank you very much, Pankaj, for the wonderful piece of advice. And keep creating wealth for all our investors.
So,
Wish you a very happy Diwali to you and your family,
thank you,
and
Nilesh.
a healthy and prosperous New Year going ahead. Uh, Thank you very much again.
Thank you, Nilesh, and wish you, all your investors, everybody who is listening to this, a very, very happy Diwali and happy Samvat. Thank you.
Thank you very much. Thank you very much. Unnati will just give her closing remarks before we end.
That was a very intriguing session, sir. I think your differential advice has a lot of key takeaways for all our investors and for us as well. And as Nilesh sir was just mentioning the 3 points which you said, following the principle of GARP, having a clear do's and don'ts, and making less mistakes, I would just like to add one more very valuable key takeaway, that one must not borrow to consume, but one must save to consume. I think that is again a very valuable input, which we at Cedrus also uh, put a lot of impetus on. So thank you, sir, for your valuable time and making the time to grace this event, and to the entire team of Kotak for having and organizing the session today. Wishing all
Thank you.
our viewers a very happy Diwali, and we will return next month again with a new topic and a new speaker. Thank you so much, sir.
Thank you. Thank you, Unnati. Thank you,
Bye.
Nilesh.
Bye.
Thank you. Bye bye. Bye bye. See you.